Hello and welcome to 3.TV. I am Ruchi Sharma. Today we are joined by a leader at the intersection of trading infrastructure and digital finance. As the Chief Business Officer of FreedX, our guest, Mr. Anton Golub, brings deep expertise in building next-generation exchanges and scaling market-making operations across volatile markets. With a sharp pulse on both institutional flows and retail trends, he is helping shape the future of how digital assets are traded, structured, and trusted. Welcome to 3.TV, Anton.
Thank you very much for having me. It's a pleasure to be here, and big hello to the audience, and looking forward to an awesome discussion.
Sure. So Anton, FreedX has entered the exchange arena at a time when competition is both fierce and saturated. What's your market penetration strategy, and how do you plan to differentiate from legacy and next-gen platforms alike?
Yeah. So first, I agree with you that today there are many crypto exchanges around the world, but I think something that we can all agree as well, that we are still very early on into the journey of the crypto industry.
Right.
And in that context, we saw also an opportunity at FreedX to position a crypto exchange for the 80% of the world's population that is not in crypto. So for instance, if we take a look at how many people in the world are actively using crypto, if they have a wallet, or if they bought cryptocurrencies, if they traded something, you see it's actually a very small percentage of the world's population. Now, why is that the case? First of all, it's because of the crypto industry is very young, but also because of the crypto industry products that are still very sophisticated, that are very complex, and require you to really understand deeply how the crypto industry works for you to be able to use them then. And this is where FreedX sees an opportunity, is for the 80% of the world's population to create crypto products that the newcomers, newbies can use with ease and enter the crypto industry and benefit from all of the amazing products we have.
Okay, great. So given the growing bifurcation in investor interest between altcoins and tokenized real-world assets, where is FreedX placing its strategic bets and why?
Yeah, so definitely a clear market fit already today exists for all of those altcoins that we have today. So for instance, today we have a lot of the blockchains, we have a lot of DeFi protocols, we have a lot of meme coins, they have their own tokens, and there's a big demand for it. And we see it in the numbers. So if we take a look, we see that a lot of the volume today is actually generated in Bitcoin, Ethereum, Solana, and these kind of altcoins that we see every day traded on the crypto exchanges. Now, a big mega trend that's happening in parallel is tokenization. And here a lot of people talk about tokenization of real world assets, and everybody has this big dream that one day everything that's of value will be tokenized, it will be on the blockchain, and people will be able to trade it. Now here we have to be very honest with ourselves and very transparent and understand that tokenization of real world assets is very, very early on. So even more early on than the crypto industry itself. And there are several reasons for that. The first obvious one is actually regulation. So only few countries in the world recognize tokenization, have a framework for it, and have an ability actually to sell tokenized real world assets in a simple and easy way. The second one is infrastructure. So we are still building those platforms where you can issue real world assets, where you can trade them, where you can use them as collateral, where you can borrow against them, and so on. And lastly, even though we still can intuitively understand tokenization, for most of the people, it's not a common product. So they're maybe more used to bank solutions where they can borrow or lend, or maybe a trading platform where they trade stocks. But very few people today are aware, for instance, of tokenization of real estate, tokenization of flats that they can buy with a small amount into such fractionalized property, right? And that's where we still need to catch up.
Okay. So tokenization of real-world assets is gaining momentum, but critics call it premature hype. In your view, is this a passing trend or the inevitable evolution of global finance?
Yes, so I have to be very careful when I talk about tokenization of real-world assets. So because we had a similar trend before called security tokens, and that was kind of similarly presented to the people, and it kind of never took off. Security tokens were never a success story. Now we have tokenization of real world assets, but that is different than the previous trends, previous hypes around securities, because today we have more regulation, more infrastructure in place, and more people aware of the amazing features, benefits, and possibilities of tokenization. So I would say that maybe this time we're a bit stronger when it comes to this particular trend, this particular narrative. But we always have to understand is that we never know how technology will evolve, how people will adapt it. I'm very optimistic, very bullish on tokenization of real world assets, but we still have to see real adoption. We still have to see scale, and this will take time.
Okay. So geographically, where is your focus? Is India, with its vast user base and evolving stance on digital assets, on your expansion radar?
Yeah, so I think today every individual, every crypto exchange, every project has to think global because crypto is a global industry. Now, some countries in the world are more advanced in adoption than the others.
Right.
So for instance, today we can say UAE is a very advanced country when it comes to crypto adoption.
Oh, sure.
Same way, India is very, very, very advanced when it comes to crypto adoption. This is also a fact, right? And then you have some countries that are completely against crypto or they ban it, but maybe we don't focus on those ones because it's not a priority. So India is an amazing country, a beautiful country. I have met very, very many dear friends who are from India, who are either living in India or living abroad, but still are very good and dear friends of mine. Extremely smart, hardworking people, and the ones who adopt and experiment with new technologies. Now, for the last couple of years, we also had a bit of friction and challenges on the regulatory side, where certain things have to be ironed out between the regulators, central banks, and the authorities to enable deployment of products and services in the crypto industry. And I think today we are there in India, in a sense that there's a more clear regulatory framework, more open government and authorities towards crypto. And definitely FreedX is looking to benefit from that and offer amazing products and services to people over time when we get the licenses, offer as well products and services in India such that people in India can benefit from crypto as well.
So we really hope you do expand and come to India. So can you share a preview of the flagship products or services FreedX intends to roll out in the next phase?
Yeah, so FreedX intends to be a holistic platform where you can access many, many different services, products and services that are very popular in the crypto industry. So, of course, always based on the regulatory approval, but we plan to offer spot trading, perpetuals, fiat on-ramp and off-ramp, staking, copy trading with AI software who helps you kind of navigate the markets,
right.
And also OTC transactions and peer-to-peer networks. So when you think of now what I just have said, you actually can imagine FreedX as a global exchange similar to products and services like you have from the leading exchanges like Binance and Bybit, where a user, when it's onboarded to a platform, can really access with ease all of these different products. Now, I have to emphasize that some products are more or less suited for a given country, depending on the regulatory and legal approval. But we see our opportunity that over time, all of these products that I mentioned will be available, accessible to people around the world, for instance, as well, also in India, in UAE, and we want to offer a holistic product. But always keeping in mind our initial vision that we discussed at the beginning. So it's products for the 80% of the world's population
right.
that is not in crypto, the newbies who need help and support with these sophisticated products. And we are building solutions for these newbies, but also for experienced traders.
Right. So in light of increasing exchange vulnerabilities and user fund risk, what institutional grade security frameworks and investor protection mechanism are being deployed at FreedX?
I think we still all remember the big Bybit
yes.
hack. So at the beginning of the year, we had the biggest hack in the crypto industry, which is worth several $billions. That unfortunately happened with Bybit, which is a very strong and respected company and entity. But unfortunately, it showed that still there are vulnerabilities in the crypto exchanges and crypto companies. I want to emphasize that today we do have vulnerabilities on the technology side, but there we have amazing companies who work on something called penetration testing and cybersecurity. So we have really strong companies that are working very hard to secure the technology. Now where we are still very, very vulnerable, and where the vulnerability happened in the Bybit hack, but many others, is human error or human vulnerability. So when a human individual who has to oversee the process, when it actually overlooks something, and then because of that, a hack happens or a hacker exploits this vulnerability, and we have big problems. So at FreedX, we are taking both approaches. So working with leading cybersecurity companies to secure the technology, both on that, I mean, on the centralized exchange side, but also with smart contracts, but also extremely, extremely important, working with leading companies to eliminate human oversight and human vulnerabilities, because we are just humans in the end, and we make mistakes, and we need to completely eliminate those type of errors.
Okay. So you've expressed skepticism towards Bitcoin treasury companies in your post. Do you believe they represent a systemic bubble in this cycle? And if so, what signals support that concern?
So on one side, Michael Saylor and Strategy, by the amount of Bitcoins they have bought, is one of the biggest success stories in the last couple of years.
Right.
So if we take a look, they own a sizable amount of Bitcoins. Strategy and Michael Saylor are one of the biggest Bitcoin holders in the world. And we can always see that as a positive way, right? Because then through investment into Strategy, people can get exposure to that Bitcoin holding. I think the part where a lot of people are neglecting the risk is, how did Michael Saylor raise all that capital to buy more than 500,000 Bitcoins?
Right.
And this is, to understand those type of risks, you have to usually be a sophisticated person in financial engineering, in quantitative analysis, because he used a very complex instruments called derivatives, in many cases, to raise such a high amount of funds. And I will just quote something that Warren Buffett said when we had the 2008 crisis, who said that derivatives are almost like weapons of mass destruction, because you use something that you don't understand, that has a lot of leverage, and when things don't go as planned, then we have huge problems in the financial system.
Right.
So because of that, I'm very skeptical and I'm very critical of what Michael Saylor, but also all the other Bitcoin treasury companies are doing, because they're using very sophisticated methods to raise this capital and then to buy Bitcoin, but also now Solana, Ethereum, and so on. And I think the risk lies in the way that they raise capital and in the way they will have obligations to the people from which they borrow the capital when they have to repay it or compensate those people. And there I'm very critical and not optimistic in that sense. And that's why I'm so vocal about it, because we need to find a solution where we don't have the same types of collapse like we had with FTX,
right,
with Terra Luna, which then damaged the industry for many years.
Okay. So with Strategy Incorporation now holding over 580,000 BTC, is there a risk of overexposure? You have answered that question to some level. Could a repeat of 2022's forced liquidation scenario, like the $205 billion Silvergate loan, unfold again under market stress?
Yeah, so I definitely think in the scenario of market stress, but that I mean that Bitcoin goes down very substantially, and that also the capital markets that were providing access to Michael Saylor and Strategy and similar companies to get assets in to buy Bitcoin. I think in that scenarios, the Bitcoin treasury companies will be under a lot of stress, because they will need to seek funding how to repay their obligations for the capital that they have borrowed. The one, I think one clear danger that many times is overlooked, that Bitcoin treasury companies might resort to share emission to cover their debt obligations. By that I mean is they go out and then they sell more shares into the market to get capital to repay their obligations. Now, this is very similar something that crypto projects do. When they run out of money, they go into with their token into the market, and then they start selling it to get capital in. And then you have clear sell pressure, and then problems arise because it's such a destabilization towards the market, and then just the people who bought into such products end up in losses. So I am very concerned about repayments of their obligations, either directly through capital or to the share emission. And I think this is where we're going to have problems in the future.
Right. So talking about stablecoins, Tether commands 66% of the stablecoin market, but with the recent ban on Tether in the European Union, coupled with USDC gaining ground as the second largest stablecoin, how will this regulatory shift and competitive pressure reshape the stablecoin landscape and impact broader market liquidity dynamics?
Yeah. So stablecoins are one of the big success stories of the crypto industry. So if we say, okay, what did we achieve that really, really works? One of those examples is actually stablecoins. And to give a little bit of a understanding what that means, today the market capitalization of all the stablecoins that we have in the crypto industry is around 260 billion. So 260 billion. This is a massive number. Predominantly, that's, as you said, it's USDT and USDC, so from Tether and Circle. And on a monthly basis, we have approximately $1 trillion of transactions of these stablecoins, again, predominantly USDT and USDC. Now, I think that Europe, particularly with MiCA regulation, that actually mandated how stablecoin issuers have to behave, I think it created a lot of challenges for stablecoin issuers because it doesn't allow them anymore to operate in a profitable way. And I'll explain this just in one sentence. Stablecoins are backed one-to-one with the fiat currency or with the dollar in that case. So for instance, Tether, what they do is they issue USDT, the stablecoin, but it's in the background backed by US treasuries, which is the most liquid instrument on the planet. And the reason why they do that is because we have a very clear backing. We have very clear liquid asset backing those stablecoins. But then Tether makes the yield. They make money by collecting the yield on those US treasuries. And this business model has worked beautifully. That's why Tether is so successful. That's why Circle is so successful. And that's why they had a successful IPO now. And a lot of people bought into their shares because they make a substantial amount of money. Now, to a greater extent, European regulation is not allowing that anymore. So there's a big restriction what you need to hold as a reserve for stablecoins. And that's actually where the challenges are happening. Tether didn't comply with that severe restriction because it harms their business model. That's why they're out of Europe. They're going to focus on emerging markets and the rest of the world. Circle decided to comply, so they have issued a USDC, but also other of their stablecoins in Europe that complies with that regulation. Right. I think it's not positive for the crypto industry because European regulation doesn't acknowledge how stablecoins work. In the end, the people who will suffer are actually the end users, so the retail, the businesses, and the traders in Europe. They will suffer, and hopefully such regulation can be changed in the future, but for that we need to see.
Right. So talking about regulations, the UAE is rapidly becoming a regulatory blueprint for crypto governance. What kind of standard legal regulatory framework is needed on a global level for the growth and innovation of this industry?
Yeah, so UAE is very specific in the world because at least in Dubai, we have created our own regulator. So VARA is a virtual asset regulatory authority. So regulator only for virtual assets, for the crypto industry, right? And they have been very innovative, very efficient, and a leading regulator in the world because of the quality of the regulation that they have actually brought to the industry. And this has been a huge success story. That's why today every leading company in the world already has an entity, a regulated entity in Dubai, or they're looking to set up a regulated entity in Dubai. Now, I'm not saying that doesn't mean that Abu Dhabi is not less well or anything. I think Abu Dhabi or ADGM in that sense as well has an amazing regulation. And likewise on a federal level, through ESCA, we have also amazing regulators. Mm-hmm. Now, always the challenge is that the regulations are always made for a specific country, acknowledging the local specifics or the local features. Right. In that context, then since crypto is such a young industry, it's very difficult to create a global holistic regulation. Mm-hmm. But still, despite that, there are certain things we all agree on. For instance, today, we all agree you have to do KYC. Today, we all agree you have to do AML. So there are standards that are actually done on a global basis. Now, I'm not sure that in the near future, we will have a global regulation for crypto because we are still in a phase of rapid innovation. We're still in a phase where each country is looking for its own positioning. And own benefits that it can offer to the crypto industry. And until we mature as an industry, I don't see a holistic global regulation like today, for instance, we have for banks or for hedge funds or for asset managers. Usually you have a global regulation because it's an established, mature industry, and then you can kind of coordinate things globally.
Okay. So as we look ahead, which segment of the digital asset market do you believe will drive the next adoption wave? And what's your top advice for new investors navigating today's volatile landscape?
Yeah, so two amazing trends that I'm following. One, we talked about tokenization of real-world assets. Let's make this happen. I think this is something everybody can understand in the world. So, if we can really get that going, I'm very excited about it. The second one is we have to be honest and say that AI is an amazing megatrend that's penetrating into every aspect of our society and of our day-to-day life. So I'm really looking forward to the intersection between crypto and AI. Do we have AI agents that use crypto? AI agents can't have a bank account. They can't have money in their bank account. So maybe they use stablecoins and crypto wallets to interact and communicate. But these will be the two big megatrends that I personally look at: tokenization, real-world assets, and intersection of crypto and AI. Now, when it comes to navigating the volatile crypto markets, I first have to say is that volatility is the feature of the crypto industry. It's not a bug. So that's why so many people get attracted to it, because of that high volatility and so much ups and downs. Obviously, they like the ups more than the downs, right? But I think today, people have to always consult themselves with their financial advisor, really try to understand and look into the products or services or tokens that they're investing in, right? And also extremely important, because crypto is such a volatile industry and volatile market, always be extremely careful with using leverage. Because if you use leverage, then even a small price move can result in complete loss of the capital or the deposit. And then, nobody's happy in that scenario. So really a big statement, not an advice, but more a cautionary statement. Be careful with leverage in the crypto markets.
On that note, thank you so much, Anton, for sharing all this knowledge and insights with us and for giving us your valuable time.
Thank you for having me. It was amazing.
Thank you.